I did want to ask you about a couple of other setups that we talked about the last time. The last time we were on, we talked about some really extended setups in some of these storage stocks. The list I think that you gave us was WDC, which is Western Digital, STX, Seagate, and SNDK, which is SanDisk. We also mentioned Micron here. SanDisk has no chill at all. This thing is all gas, no brakes. It keeps trading up every single day. Maybe it's reversing now. Are you still stalking these for trades? What do you think on some of these?
SanDisk, I think, is the most notable of those charts and obviously the strongest. Actually, one of my favorite topping patterns, which is the potential that the indexes themselves actually do this at a certain point if we continue to accelerate up. One of my favorite topping patterns is when a market actually breaks an ascending channel to the upside. So you look at that SanDisk chart that you have up there.
Yep.
That was a very strong, like 45-degree angle up ascending channel. And then it actually broke that to the upside on October 23rd, just a couple days ago. So that, if you already have an uptrending stock that breaks to the upside, that is a parabolic move. That's the definition of what a parabolic move is. The only way that you can get a parabolic move in a marketplace is the greater the price, the greater the demand. And that is inherently something that becomes unsustainable. So what SanDisk started to do just a few trading sessions ago was begin to break higher in a way that actually becomes unsustainable. Mm-hmm. What I really like to look for in those moves is like into the third day. So that was really yesterday. Yesterday, you had that day 3 gap up. I know you know my good friend Scott Redler.
Oh, yeah.
This was the classic RDR trade of the upside extension on the day 3 to short it back through the previous day's high. So yesterday, we had a trade basically to short this SanDisk on the open back through like 187.5 or so, the high from the day before that. And as far as a target goes on the downside, so I covered a little bit. I'm always quick to cover some to cover risk and make sure that if I'm wrong and my trade fails, that I don't lose money on it. But really the targets on this are the 8 and 21 EMA on the daily chart. So the 8 EMA would be what I call like the upper target, which is sitting at about 163. And the 21 EMA, I would call the lower band target is all the way down at 142. So when you think about that trade yesterday, you know, it's an expensive name. You're putting on a few dollars worth of risk, but the risk reward profile on that trade is excellent. Just to target number one, you're getting about $15 worth of reward on the few dollars of risk. And that's just to the first target. And then I always like to keep a percentage of my position just in case a retracement becomes a reversal as well. So that was SanDisk. That's the one that actually broke out. And again, I actually do think that there's a likeness that you can make to the S&P just in terms of chart patterns. If we're studying chart patterns for a second, the market, if you want to pull up like a SPY chart or an SPX chart real quick, so we can just do some chart analysis. The market in a similar way has been in this 45-degree angle up channel since May. And I have a couple ways in which I measure what I call extreme extension in the market. And what I was talking to my team about yesterday is the most incredible thing to me about this bull run has been that it feels like we're positive every single day. It feels like we're green every single day. Yet, in terms of my measure of upside extension, yesterday was the first time that we hit what I call more extreme upside extension for the market since July 3rd. July 3rd was the first time. So it's like we're up every single day, but we haven't seen extreme upside extension in 4 months. That's very unusual. So right now I'm trying to counterbalance a couple things in my head. I'm a big believer in seasonality and understanding flow of funds, that the corporate buyback bid's about to turn on in November and the November strength. But at the same time, I'm looking at the beginnings of a similar pattern to what we just saw with SanDisk, which I think becomes an unsustainable move. The question is, how far parabolic do we go before a real pullback comes into play? So it's an interesting scenario, and it's why I don't believe in chasing price. If you could just get the market to just start actually going sideways here, or actually give a little bit of a technical pullback higher low, I think that would be the most bullish situation. If we just continue to rip higher this week, I actually think that becomes an unsustainable move that might actually lead to some sort of a blow off top in the market, despite the November seasonality. So it's just a really cool pattern that we're able to take from SanDisk and apply to the market. And it's something I'm really paying attention to right now.